The Trump administration is looking for a major overhaul of the U.S. tax code this year. In fact, next to healthcare reform, it's probably at the top of the White House's agenda. So here to talk to us about what tax reform might look like is Scott Borsack of Szaferman Lakind. Scott, let's get right into it. What is going on in Washington with tax reform?
Well, that's a very interesting question. We think we know what's going on with tax reform. As we sit here today, there's almost nothing going on with tax reform. Our friends in Washington right now are consumed with their attempts to repeal and replace the health care bill. But before they took up health insurance, we did see several proposals, and the administration did trumpet forward an outline of where they thought they were going on tax reform. The original timeline was to adopt legislation this summer by the end of August, before the September recess. We still think we're going to see that pattern, but we're getting caught in waiting.
Well, why don't you give us the outline of what the major reforms would be right now as you see them?
Well, there are several areas that the administration has proposed to reform. In the individual area, there'll be some rate simplification where we'll see rates of 10, 25, and 35% for individuals. The alternative minimum tax is supposed to be repealed. Many deductions that individual taxpayers enjoy in itemized deductions will be eliminated. The standard deduction will be nearly doubled. So that's on the individual side. On the business side, there's talk of a rate of anywhere from 15 to 20% to replace a maximum 35% rate that we have today. There's a proposal that's entirely new to create for the first time a 25% rate of tax for income from so-called pass-through entities. Right now, a pass-through doesn't pay tax at the entity level. Its owners pay a tax at their individual rates.
Yeah, our members are really excited about that. Most of our membership is small businesses with fewer than 100 employees. So why don't you tell us a little bit about what a pass-through entity is and how this would benefit them?
Well, there are several types of business entities that qualify as pass-through. One of the most popular is a limited liability company. There are also partnerships, general partnerships and limited partnerships, and corporations that make an election to be taxed as a small corporation are themselves pass-throughs.
That would be a S corporation, right?
Yes,
okay.
That's correct. The common thread through all those entities is that they don't pay income tax as a regular corporation would. All the items of income, gain, loss, deduction, and credit flow through from the entity or pass through from the entity to the individual owners. We've never had a single rate apply where the tax rate for the income coming from the pass-through is different than the individual rates otherwise paid by the owners. So right now, but for this proposal for pass-through, the maximum rate on individuals, as the administration has proposed, is 35%, except if this is pass-through income, which would be taxed at 25%. So the members of this organization obviously very interested because they would enjoy roughly a 1/3 tax reduction by having their income taxed as a pass-through. I'm sure that the lawyers and the accountants in the audience would be very interested themselves, both for their clients as well as for their own organizations, because most of those professional practices are taxed as pass-throughs. They now pay the higher individual rate, and this creates an incentive to begin to convert entities to pass-throughs to get that lower rate.
Okay. Now, why are they doing this? Why are they treating small business income differently than individual income?
Well, it's the administration's position that small business is the engine that drives the economy. By numbers, they've asserted that there are many more small businesses in this country than there are major corporations below the Fortune 500. So the theory is if you provide those businesses with the incentives to grow and tax them less, they'll have more money to invest into plant, equipment, and employees. As the organizations spend money on employees and on consumables, the economy expands. That's their theory.
Okay. Now, and isn't it, just because a business makes $1 million in a year, it doesn't mean the business owner is a millionaire either, does it?
No, certainly not by a long shot. Looking at the taxable income of an organization is somewhat misleading. Some businesses look like they're losing money, but because of certain non-paper deductions like depreciation, for example, where there's no impact on your cash flow, but it does adversely impact your bottom line, so to speak. But then, whatever income the individual collects, that then is subject to tax at their rates under our present system. So it's somewhat misleading to look at nets that way.
Okay. Thank you, Scott. This has been very enlightening, and hope to have you back once they've passed tax reform to tell us what's actually in it.
Well, thanks for having me, Steve.